The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the German DAX. You see, that's really not reacting very much as we are. We're not reacting too much either in the stock market. NASDAQ is down quite a bit, but it's setting at major support, to say the least. I'll put this up here so you can take a quick look at it this morning. We've had some pretty good volatility in the NASDAQ. You'll notice that we just completed an ABCD down there at 12,475 and 12,467. And if we get below that, then we set up a possibility of breaking below 12,300, and that sets up some serious damage from the bull market since October. So whether we'll be watching that level extremely closely today, very, very closely. Now, since we're talking about the NASDAQ, we have some news here, of course, with Tesla making all-time highs this morning. I want to get this up here because those of you that are aficionados of ABCD, there it is. Going back to the low that we made way back in early 2020, we had the run up to 510. We had the pullback to the 382 retracement there at 330, and that measures to 765. And I think I heard someone say it was already trading at 775 this morning. So that's going to be a completed pattern in Tesla. Can it go higher? Absolutely. But you want to watch it at that level because we watch these ABCDs very closely. And when they work very nicely. Can someone give me an update of where Tesla is trading this morning? I'd heard it was quite a bit higher, but how much higher, I don't know. So that 865 would be the area that we should be. It's at 765 was the number. What was the high, Tommy? If you don't mind, I'd just like to know if we got above 765 by very much and for how long. So keep a close eye on that one. High was only 764. Well, maybe these things work. Who knows? I don't know. All right, let's take a look at something else that's really important, folks, from my perspective, because I'm involved in this market just about every day, and that's the gold market. I want to get this up here and take a quick look at it here. Here's where we were last night. This is over the last 5 months. We made a 61% retracement to the exact tick. Within $20 out of a contract that's worth $195,000 from the high that we made way back in August. That was at 1962. We immediately dropped $32, which is the harmonic number in gold. We got down to 1926. So there's a possibility here that we're looking at that ABCD being completed, and that means that gold should start down. Whether it will or not, I don't know. But one of the factors that I've been mentioning in the newsletter is if we take a look, and also during the TFNN shows here today, and just about every day. This is the GDX index. You can see here we had that move yesterday where we were higher and then closed a little bit lower by just a hair. That means with the gold down now on the day and silver down now on the day, this is not going to open higher. And that's not a bullish pattern, folks. That's a completed Gartley there at 39.25. So if we start getting above 40 in this GDX, which means gold will be above the 1962 level, then look out, because this thing could easily go. We had Bitcoin, folks. It's went way above 30,000. I think it's 30,300 or 33,000 or something. And if you remember, way back in September, when we were talking, when we did our very first live trading day, one of the recommendations we made that day was to buy Cardano at 6 cents, folks. It's trading at above 30 cents today, folks. That's 5 times. That's a heck of an increase from 6 cents to 30 cents. So and we bought 3 shares in there. So we put our 18 cents on the table, and by golly, look at it now. We've got 90 cents. So we're doing okay with that one. All right, let's move on here. Oh, David is talking about Bruce Covener, and here he's saying tight congestions in which breakouts occur for reasons that nobody understands are usually good for risk-reward trades. Well, Bruce Covener was one smart dude, folks. He is one of the largest Forex traders in the world. He started his trading at Conti Commodity. Of course, he was also at He was also at Commodity Corporation, but he's very, very good. He's asking me who is my preferred dealer for Cardano. I let somebody else get it for me because it's too hard to go through it, but I believe it's CoinStop or CoinStamp, something like that is what it is. I'll ask John Jameson. He was the one that made the recommendation on that, because this stuff that was in the newsletter, John writes all that. But Coinbase, that's it. There you go. Yeah, that's the one I watched. So it's based on the fact that the guy for Cardano, which is the symbol ADA, Charles Hodgkinson's, used to be the head guy at Ethereum. And then when he went, that's out of Hong Kong too. So it's interesting. Whether it works or not, I don't know. But heck, this stuff is getting crazy. I mean, look, wow, when you see what's going on in the world today, folks, it's absolutely surprising. I woke up this morning, I knew the election was going, but I didn't follow it. When I saw that the Republicans lost, I said, wow, the market's got to get really hit. And the first thing I saw was where the NASDAQ was. I said, wow. I said, here's NASDAQ right at a 61% retracement, and the S&P's hardly down at all, and the Russell is up. So there's cycles in there that we are not aware of, boys and girls. That's all I can tell you. The one thing I feel relatively strongly about is we talked about this the other day. We went up and we made a new high last night. Let's get this up here by about 10 cents, if you can believe that. This is the heating oil. We made a new high last night by 10 cents. At 153.86. The old high was 153.76. That was the exact 61% retracement of the high from 0.3. That's a 135 pattern given to us by Roy Longstreet and his son Bill. And it was also exactly 50% from the high that we made way back in September of 2018. So you have 3 major ratios, plus you have really nice time symmetry here. You can't ask for anything better on that, folks. So I put a recommendation to sell it at 153.40, and we were fortunate enough to get filled, and now it's working down. So whether it works or not, all you have to do on that one is risk a 2 points, which is roughly $800. But if this is right, it could make a great deal of money if it in fact right. We won't know that for a day or two, of course, because it's still real early in the game, and you've got to be able to understand that these things don't always move that way. I wanted to bring up, I missed one this morning. One of our listeners wanted me to bring the chart up of the FTSE, so I want to get up here to let you see it. The FTSE just completed a beautiful little 3 drive to a top pattern, and it should be starting to head down. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the one of the websites that sells these the currency. It's a very, very, very popular hobby to have, is to buy old currency, and these are $1,000 bills with Grover Cleveland's picture, and these run roughly from on the low slide around 2,500 to the upside above 5,500 is what these bills were being sold for. I don't know if you've ever seen some of the old bills from back in the 1800s that have the pictures of the locomotives on them and stuff. Those sell for $50,000 or $60,000, but boy, are they are absolute works of art. If you've ever had a chance to see them, boy, if you ever go into a Federal Reserve building, you can see them. But boy, they're really beautiful. They are really, truly art objects, especially if you got about a dozen of them. All right, let's move on here for just a second here. We've been looking at one thing, those of you that like ABCDs, like we're just seeing in Tesla. If we take a quick look here, this is the U.S. dollar index. As you can see here, we have a beautiful ABCD starting here around the 1st of December. We come down 9 days, rally up 3 days, come down 10 days. So we should be starting a rally, and we certainly have started that tonight. But given the fact that, shucks. One of the problems, folks, is when you give a neighbor a recommendation, you have to be worried about they're going to call you at any time in the morning. So that's one of my neighbors calling in and trying to get my telephone information here. So there's nothing else I can do. But I should have turned it off, but I didn't realize he was going to call in. Anyway, no, the Fuller Brush man is not. I know. I should have had him call in 877-927-6648. Actually, the story behind this is he's a good friend besides being our neighbor here. But in November 2016, when it was a big upset, when Trump won, he bought $5,000 worth of calls on the Dow Jones with a 2-month expiration. And, he bought them way out of the money, so he bought a lot of them. He really cashed in good. He made about 45 large on that. So he was the other way today. He was looking for the market to do the same thing, and so he put his $3,500 up. And I sent him an email this morning saying, look, this market doesn't really want to go down very much right now, so be really careful, because if you're just following the news, that's what usually happens. So we'll pay attention to that as we go through. And the day ain't over yet, as Mr. David White says. You're absolutely correct on that, puppy. That's absolutely correct. Let's take a look here at the British pound here, since we're talking about currencies. We've got one here that looks really interesting. This is a hourly chart here. This is a Gartley pattern. You can see there's also a 3-drive pattern in that second leg up there. The final the BCD leg also has a 3-drive pattern up there. So as long as you don't get above 136.70, this should be 136.80. This should be okay. But we've had a little bit of a bounce in the dollar, but not a much to really matter very much. The big news, folks, is we got the Treasury bonds. They are really getting hammered, and we've been bearish those for a very long time. And we're if we get below 169, and we're not very far away from that, 170 and change right now. If we get below 169, that's going to be a really big breakout as far as interest rates. It means interest rates are going to be going higher and not lower, and that's going to put more, strain on the Treasury, because they have to pay the interest on that stuff. I mean, it's not a lot of money right now, but when you got, a lot of money out there, it is a lot of money. So let's, make our watch that very, very closely, because, we live in interesting times, folks, and this is the beginning of a year that is going to be, I think it's going to be, put in history books as what happened to some of these markets. That's just, look what's happening with the Robinhood people that are in there. We've got more people in the markets than ever before, and we've got more people buying calls than ever before. So a lot of things can happen out there. So, make sure you use stops if you're in these markets. If you don't, you're just acting like you don't, you don't really care. And believe me, you better care. Otherwise, you're going to be looking at something that doesn't look very, very pretty. That's the main thing. Now, let's take a quick look here at Apple. We've been watching this for quite some time. This is where we are as of last night. We've been following it just to show you how the patterns work with the ABCD. Yes, there's going to be more interest. There's going to be a lot more volatility, I believe, on both sides, up and down. So you just got to be ready. But boy, if you like patterns, this is the kind of thing you like to see, because look what last night you had a perfect ABCD in gold at 1962. You had a beautiful pattern in crude oil. You had a beautiful pattern in heating oil. You had a nice pattern in the dollar index, and you had a beautiful pattern in the NASDAQ. My gosh, they were all lining up, so very, very perfectly. So give me 1 second here so I can check to see what the markets are doing here this morning, because I'm at a spot here where I think we need to get ready to see if we're holding in that NASDAQ or not. It's important that the pound broke, holy cow, the pound's broke 120 points. So that's a good idea. Holy cow, shut the front door and raise the rent. Give me a second here and let me pull these up so I can see where we are. Hold on here. All right. Have we held yes, we held the low at 24,091. We rallied up to the 382 in the NASDAQ at roughly 26,000. We're sitting there right now. The key level to watch is if you go below 12,000, 467. If we go below that, that means we're getting ready to break a lot more. Until that happens, it doesn't look like it. We're still trading above 3,700 in the S&P, and that doesn't mean very much at all. I mean, it's just really, very, very minor considering the news. I mean, we're talking about the Democrats controlled the House and the Senate, and the White House, the Treasury, and space program. All right, let's move on here to the dollar index, folks. We're trading at 170.13. That's very, very close to the 169 level. I think that it's got a chance here to hold at this level, but my guess is we're probably going to tap out the 170 stops area. They're down there at 170.03. And then once we see a 169 handle, if they don't accelerate from that level, then you've got a chance for the bonds to hold up. And all it's going to be is a dead cat bounce, folks. We've been saying for a long time how bearish these bonds and notes look. Not zero interest rates, far from it. So this is something the Fed hasn't been expecting, and if it starts to accelerate, I mean, we go back to where we were at 4%, we're in big trouble, because I don't think with all the bonds that are out there that we can do that. But I that's why I'm a technician, folks, not a fundamentalist. That's for sure. Okay, so that's what we're watching here, and we'll pay close attention to it and see what's going on. We have a break coming up, and when we get back, I want to go over some of the futures.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have as our guest the first time this year, Shane Smolian, thewolftrader.com. Happy New Year, my friend.
Happy New Year, Larry. How are you?
Living the dream, baby, on the green side of the grass. Why don't you go ahead?
Sounds good. Happy New Year, everybody. I would like to start out here with our Fear and Greed Index, as we always do here. And the Fear and Greed Index is looking rather neutral right now. It's still pushing a value of around 54, and this is nothing either way. So, before we saw some extreme readings pushing up near that 89 to 90% level, but right now it's just kind of in the middle. So it's not really telling us too much one way or another. If you take a look here, as I usually show, this is the actual graph of it, and it's just right there in the middle. And you can see there we had that extreme level drop off after COVID. This is the graph here. This is 2020. This was right before COVID. This was the low. And then it went up and almost challenged at a high before, and now we're back into the middle ground here. So not really much to report there. It's just kind of sitting in the middle. Now, Larry, the last time I was on your show, we had a caller call in and ask about transits. Do you remember that? We had the caller in there?
Yes, sure. I
think
sure
it was,
do. You bet.
It was Jeff. So
yes,
I did a little segment on transits. So just to kind of do like a little background on this, because people do have questions about this stuff. Do they work? Do they expire? And so what I'm going to do is I'm going to do a little presentation here on the planetary speed index, and then I'm going to talk about transits and different types of transits and how we can use them. And I'm going to summarize 2020. So single event transits are discrete events. So a discrete event is one event that happens across time. And around that event, there's what we call an orb. Okay, so the event might happen like this, and then around it, there's an orb around it where something can happen in the market, let's just say. So depending upon how big or how fast the transit is, that orb, let's say it's 1 degree on either side, let's just say. That orb can pass over very quickly, or it can pass over very slowly. So, for example, if we're looking at the moon, those orbs can be gone within a day. So he was asking, we had a bunch of events, are they expired? And the answer to that is, well, it depends. If it's a lunar event, yes, it expires very quickly. And the market tends to do very well with these lunar events when the market is emotional. So when we have a period like this where it's just kind of stagnant, that the lunar events are not as pronounced as they are during emotional times, like 2008. Now you have large planetary events that take longer to happen, like we're going to see this year with the Saturn-Uranus squares, and those events can actually take weeks to occur. So if we're talking about the effect of the Saturn-Uranus square, again, this is a discrete event. It's just one thing happening in the sky. But, instead of it looking like this, those can take weeks to unfold and affect the market. So we're going to see that this year, though. Saturn and Uranus are going to be making these squares, and the markets typically don't like it. Now, one of the things that I like to do, I like to look at composite graphs. Okay, so a composite graph is a continuous function. So instead of it being just one event across time, it's actually like a continuous series of events. So instead of it just being the one event and we're waiting to see what's going to happen on either side, it's a series of events that create like a continuous flowing function across time. And so I really like to use these continuous functions because they trend across time and they can tend to make themselves up. If it doesn't happen right away, it can actually continue across time. So I'm going to show you the planetary speed index. This is one of my favorite continuous functions to use across time. So this is the speed of the planets, and I look at all of the planets, including the asteroids, including the trans-Neptunian planets, and we come up with a function of just how fast are the planets moving. Now, this is one of my favorite functions. It's not just a point in time, it's a continuous rolling summation of how these planets are moving. And so how did it do in 2020? Well, I'm going to show you in a minute the whole year and then each segment. But it modeled the COVID crisis beautifully. It actually modeled the decline in COVID, which I'm going to show you almost perfectly on that first dip. It modeled the COVID low. It modeled the June plunge with the lunar eclipse. We had a lunar eclipse in June, and the planetary speed index was falling. It modeled the October peak, and it modeled the November low. So while none of these are perfect in a vacuum, it is important to note that in my estimation, this is one of the best astro indicators that I've seen for the market. There are others that are very good too, but this is not even looking at transits or anything like that. This is just how fast the planets are moving. And so that's amazing because it's a totally different way to look at it. And so it gives us some more information on the markets. This is the actual 2020 in review. So you can kind of get a snapshot of this across time. This is COVID over here. This is right when it started to decline during COVID. And you can see that this planetary speed index modeled the decline across COVID very well. And then you can see into here, there's the low. And then across time, of course, we were in this big bull market. And the context of this, this is an oscillator. So an oscillator should always be taken in context with the trend of the market, but it still did a very good job of picking up these little peaks and troughs in here. So I'm going to zoom in here real quick. This is going to be just the first third of the year. This is COVID. So this planetary speed index here in red, you can see that this was falling hard ahead of the COVID. And then, of course, this is when we got the big decline. Now, the astro in general works better when the markets are emotional, okay? So, of course, we had this emotional time during COVID. And then right here in the low, you can see into here, this is the low of the planetary speed index. The markets also made this low into here too. So it did an excellent job during COVID of tracking this crisis along with the Fed use. So I use this with the Fed use. These are my two main indicators on the S&P. But this is very important. And the reason I like this, like I said, is it may not look like something's happening, as you can see here with COVID. Okay, it was falling and falling and falling and falling, and then all of a sudden the market took a while to catch up, and it did eventually fall with it. So when you have a continuous function like this, you don't have to worry about, oh, did I pass that single event? Because it's continuous, it keeps going, and a lot of times the market will catch up at the very last second with this. This is sure.
Shane, we've got a caller from Philadelphia. I think it's Jeff from Philadelphia is calling in. Jeff, are you there?
Yes, I just had a simple question. I was going to ask Shane if he had an opinion on the effectiveness of Vedic, V-E-D-I-C, Vedic astrology, how effective its, predictions are.
Yeah, so the Vedic astrologers they're very good. They use a slightly different type of a zodiac. They use a progressed zodiac, so the signs are a little bit off. But when we're talking from the tropical zodiac. But they do look a lot at the node. They call it Rahu and Ketu, is what they call the north node and the south node. They're very good. They look they tend to look more into the charts than typical astrologer. But I found them to be useful. I mean, I always try to listen to the Vedics. I always do learn something from them. But in terms of financial markets, this is a different ballgame here with the speed index.
Okay, stay with us,
thanks.
folks. With Shane Smolian, wolftrader.com. Thanks for calling in, Jeff.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Direxion's daily S&P 500 bull and bear leveraged ETFs. Direxion leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit DirexionInvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're chatting with Shane Smolian, wolftrader.com. You want to continue, young man? You're doing a great job so far.
Sure. Thank you, Larry. Yeah, so one more word on the Vedics. Astrologers like to argue amongst themselves. Vedics use sidereal astrology, which takes into account the precession of the Earth. So they argue over the signs. They say, oh, you're not this sign, you're that sign. What we're looking at here are aspects, transits to the planets. So it doesn't matter the sign. So I want to point that out, that it doesn't, the sign of the planets, the sign makes no sense, makes no difference. This is how fast the planets are moving. So this is what I'm looking at here. So this is the chart here of October. This is October. This is later in the year. So you can see here it picks this up. It was falling here. There was a rise here that it caught it a little bit here, but it was falling. And then on this peak here, it catches the peak, and then it actually catches that low. And then we've been off to the races ever since. So I really like this, Larry. I think it's a very broad-based indicator, and I think it gives you a good idea of the markets. So that was just a thing to go into. And then even someone like a Vedic astrologer, let's just say you like Vedic astrology, those are discrete events. So once they pass, they're done, they're expired. This planetary speed index continues to go across time.
Shane, right. As I recall, you are a specialist in Vedic astrology, aren't you?
I'm a specialist in Uranian astrology, and Uranian astrology.
Okay.
Yeah, right. And we have more letters in the alphabet. So this is the advantage of Uranian astrology, is because if you're trying to write a book, right, and you only have 10 letters in the alphabet, you can't do it. So the Uranian astrology, we have many more planets and energies to look at. And so that's why I like it, because we call them the Greeks because they follow the Greek gods. They're named after them. But you have so much more information to work with than just trying to look into the traditional planets. There's only so much you can look into. And the Vedics are very good at looking into the traditional planets. It's just there's not enough information there to do it without the Greeks, in my opinion. Okay, the Fed. What's the Fed up to? So the Fed is continuing the QE at a pace of about $120 billion per month. So keep in mind, guys, this is still going on, but there was 5 major emergency lending programs that were shut down on 12/31. Now, this was supposed to happen with the CARES Act, and this created like what I call a super QE, super quantitative easing, because you had the bond buying and then you had the lending. And so this is a very complicated web, but what I do want to show here is that this is a chart here that I showed before. But up here on the top, you can see, and I talked about this last week, that the Fed shuts down these emergency lendings here on this red arrow, and then the market immediately drops on Monday. This is significant because the corporate bond markets were being helped by the Fed. So I think this is significant. This has weakened the Fed to some degree. Okay, so I mean, Larry, you were asking me this. You said, can the Fed do whatever they want? Well, in some ways they can, but in other ways, these emergency lending powers were part of the CARES Act, so it expired. So the way that I put this as a simple formula to tell people is quantitative easing plus the emergency lending gives you what I call a super QE, or a super quantitative easing. And that's what we saw during 2020. We had this incredible support across many perspectives and many facilities. But now we just have QE, which is still strong, but it's not the same as we had in 2020. So I want people to keep in mind of that. So this is just a little graph here showing the different facilities. And the 5 that were shut down, that were funded by the CARES Act, were the primary market corporate credit facility, the secondary market corporate credit facility, term asset-backed securities, or TALF, Main Street, and municipality liquidity facility. So these are gone with the CARES Act shutting down, and so I think that's not good. I think they should have left them open, but I'm not making those decisions, so that's not my problem. Now, 2021. Let's talk about the Astro. So we're getting into this now. In general, 2021 is a negative outlook for the Astro. Why do I say that? Well, first of all, Saturn is going into Aquarius. Jupiter is going into Aquarius. These are continuous functions. Okay, we talked about the difference. Typically, Saturn and Aquarius, Jupiter and Aquarius are negative events. You can go back through time and look when this has happened. The markets typically don't do too well. They'll go kind of sideways to down. But there is one here that I'm looking at, which is the Saturn-Uranus squares. And this is a discrete event. It's one event, but it happens 3 times. Okay, so because of the retrograde motion of the planets, it's going to go once, twice, 3 times. And this is typically, the markets don't like this. I want you to think back to 2008 during the financial crisis. This is when we had the Saturn-Uranus opposition. And this is an aspect that I actually look at. It's a single one, because the markets don't like it. And this is telling us these 3 are typically negative, and really negative into the first few months of this year. And I talk about this in the newsletter. I actually give a graph. I combine these 3 into a graph. I made a video on it. But that's not good for in terms of the Astro. Now, the Fed's powers are reduced. I think that's also another negative with these lending facilities. But we're still in a QE period. Okay, quantitative easing is still going on, so keep that in mind too. That's a positive. And then the stimulus, of course, is inflationary. Everything that they've done is destroying the dollar, which, of course, puts upward pressure on anything priced in dollars. So that's just the first state here. And then this is the comparison here. I like to look at this. This is the actual bond market. In green down here. This is the bond market down here. This is the TLT, which is this, the combination between the 10 and the 30-year. They have been trending in opposite directions, largely because the Fed has been coming in and pushing money into these corporate bond markets. Okay, so now you can see the red arrow here that the Fed is shutting down now. So if this market starts to roll down, I think the S&P is going to follow it. And I think eventually it's going to start to put upside pressure on the bond. Now, I know today the bond is down. For those of you who follow RSIs on the bonds, right now the bond is pushing an RSI of about 19%. That is extremely low for the bond. So it wouldn't surprise me if we're seeing some type of a near-term low on the bond right now. And I think because of, I will call this as close to fundamental. I would call this Fed fundamentals. Because the Fed is pulling back, I think it's going to start to put upside pressure on this long bond here. So that's an interesting take on this, and I just want to emphasize that this stuff is complex. It's not just such a simple thing with the Fed. Monetary policy is complex. You have multiplier effects, but the fact that they are pulling out of these markets is significant in my opinion. So I think it's going to affect 2020. Now, what's the state of the S&P? Well, we have the Fed juice 3.0 in a sell. We have the dollar juice in a sell. The planetary speed index is in a sell. And then the transits are mainly red this month. Okay, so I think we are looking at a possibility here after we get through the noise of this election, and then today's the certification. After we get through all of this noise, I think there's a chance that we could start to see some downside pressure on this S&P. And I have this graph here, but the red is the Fed juice here. I'm going to circle it here. And we also have the dollar juice, which I follow, which is also in a sell here. And on the 9th, the planetary speed index, which I just showed you those red graphs, is going to be in a sell. So I think there is the potential here for some significant downside pressure in the first part of this year. I think for the first few months, at least in terms of the Astro, that this market could start to feel some pressure.
Stay with us, folks. WolfTrader.com. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with the WolfTrader.com, Shane Smolian. Shane, you want to tell the folks what's on the menu here in the next day or two?
Sure. Fed juice and the dollar juice are both in the sell. So the dollar juice, in case you guys don't know, it's an indicator that I made. It's a trading system that takes into account the actual the relative strength between the S&P and the actual U.S. dollar, and that's in a sell right now too. So both of these are in a sell. So I think on the near term right now, I just think the longer term picture, the further we get into January and then into February, I think that the rougher it's going to get. Now, getting back to that Vedic concept again, the Saturn-Uranus squares are going to happen whether you believe it's in Taurus and Aquarius or Capricorn and Aries, which the sidereals look at. It doesn't really matter. The square is the square, and that energy is coming, and we can track how the market behaves to that square. So I just want to point that out too, because I think it's kind of pointless to argue about which sign is better. It's what we're really looking at here is the actual aspects of the market. I got one more graph here I wanted to show. I actually have a lot here, but I'm going to show this one. This is the S&P price in terms of gold. I actually like to look at this because some people believe gold is real money. So I track this down here on the graph below. You can see the gold graph down here. This is a weekly chart. So every time this climbs up, it's in a buy relative to gold, and the weekly time frame is still strong in terms of this, in terms of gold. So if you want to track the S&P in terms of gold, the weekly is still strong. I mean, it's hooking down a little bit, but the weekly time frame has not seen any damage yet. But I just think that, due to what's going on with the Fed, due to what's going on with in general this year, I think there's some vulnerability this year for the first time. I don't think we're fully out of the weeds with the COVID yet. So, just be cautious with it. I put a graph up, like I said, with the newsletter and the video. I actually did a video reviewing the newsletter and the graph this year for the year. So I tried to do like an annual overview too. But I think definitely the first part of this year, there is some astrological risk going on. So for those of you who want to reach me, it's wolftraderfutures.com, www.wolftraderfutures.com. I'm Shane Smolien, and thanks for listening, guys. We'll see you there.
Thanks for joining us, Shane. Happy New Year, folks. We'll see you tomorrow when we have Tim Bost on.